Because if you're trying to make money and don't even know how to read a 5 minute candlestick a chart, you're gonna lose your money.
And we are live. What it up? What's up, gang? What's up, C2?
What's going on? Let me change this one thing because, like, the video that you made last time, like the mic volume for me was like too, like I couldn't hear myself.
So yeah, I wrote down some topics of what we'll be talking about the candlesticks. Pretty much why it's important to have a candle close, why you should wait for those. Fake outs. We'll talk about fake outs. We'll also talk about I'll also share my screen and show. I just created a quick little PowerPoint, like 18 slides of something super simple of why it's important to wait for a candle close. And then we could just go in and also just talk about it as well. And also talk about our favorite setups too as well. Because I know we have our own setups that we love to take. I like that bullish continuation pattern. That's like my favorite one that I always continually share with you guys. So pretty much candlesticks is something that forms on our charts every time we pop up a chart. It does not matter. And time frame is really important. So a lot of people are stuck on the 1 minute trying to charge the 1 minute, which is totally fine. But you got to look at the higher time frames. And that's pretty much where I'm at. My mentors that told me it's always important to check the higher time frames. The higher the time frame, the stronger the move. And that's pretty much what stuck with me my whole life or my whole time trading is just the higher the time frame, the stronger the move. What about you, C2? What have you heard about candlesticks or even just time frames in general when you hopped into trading? Or what did you learn about them too?
I mean, that was the first thing that I learned. Like, what do they mean and everything. And it's just so interesting that once you learn the candlestick patterns, not candlestick patterns, but like how the candlesticks like open, close, like the shadows up and down mean, um, it all makes sense and it all comes to fruition when you're like trading because you're like, oh, like that, you're getting a pin bar and you already know what that is, right? Like you already know what kind of play you're going to be getting into and anticipating. So it's very, very important to learn the candlesticks, like what they mean. I personally like key areas, key levels of support and resistance when it comes down to like the 5, 15, and the hourly. So when those all three of them close, and obviously you'll come to find out like what that means, you'll see a lot of like movement. You'll see like a lot of, because then you're looking at the higher time frame, right? So when you're looking at the hourly chart, right, like the hourly candle is going to close in line with the 45, 30 minute or whatever. Actually it's like 15 minutes and the 5 minute. So it's three candles, so three charts pretty much that people are looking at that could give you an awesome play. Anything else I don't.
I
I mean,
agree
even
with that.
yourself, like even yourself, you call it out. You're like, oh, like 15-minute candles are about to close, and we always count down. And sure enough, like we'll see a spike or whatever. We'll see some movement. So it's good to know those things.
I do find that interesting though. Yeah, you're right. Like the 4 hour halftime show, whenever the 4 hour closes, it's funny. It's pretty interesting how there's a big movement after that 4 hour closes. And if people don't pay attention to it, they might not even know what's going on. They just see a fat pump going on, but really it's just people are now ready to step in. But yeah, so it's interesting. So we'll get right into that. And honestly, I'll share my screen too here shortly just to kick it off and show people what we are talking about. Just going back to candlesticks and going back to what we're talking about waiting for a candlestick to close. I find it really important for you to wait, for any trader to wait for the first 5 minute candle to close, even the first 15 minutes of market open. I recommend every trader to pretty much wait for those timeframes to close because a lot of times, as soon as the market opens, in my experience, it's just people getting out of their positions from yesterday or people, predicting a pump or a dump. And so they're pretty much loading up on these positions and also getting out of their positions from the night before. So I find it really important to at least wait for at least a 5 to 10 to 15 minutes of some action to see pretty much where the market's going. And so you can see I just drew out earlier pretty much how much candles represent a 5 minute close. So on the left side right here, it takes 5 singular candlesticks to make a single 5 minute a candlestick. So this is pretty complex, but you can see the time frames right here at 6:31 to 6:35. That's 5 minutes of action on the 1 minute time frame. And that's what it looks like on a 5 minute candlestick. So if you were to look at that, in my opinion, that single 5 minute candlestick looks real weak. It looks real weak, actually. And so that's why I find it really important to just wait for a 5-minute close instead of just looking at lower time frames like the 1 minute and thinking that that's all you need to really trade. You have to look at higher time frames and look at what's really going on in the bigger picture, because you might not see this 5-minute candle close. And this 5-minute candle close, the way it's closed like this, is really important to understand the story that it's telling, because this story that it's telling is pretty much saying that like it's weak. There's a sell-off at the top, seller stepped in last couple minutes, last 2 minutes to be exact. And so that's why we get that candle close.
Another thing to that, what I like to do is the 5 minute, right? So you'll get a lot of times where it chops. Like we trade SPY for the most part, so it chops. Even like this past or was it Thursday, which is a lot of wicks up and down, and it gets confusing. You can't chart it, you can't draw a trend line. Like the shadow goes past it. Like what do you do, right? I always, when it's choppy and it starts going sideways, I always go to the 15 minutes and I go higher until something makes sense. And it kind of helps out with staying in the trade and like staying persistent through that, or like knowing when to cut. Like if it goes to the bottom of the shadows, looking at the 1 minute and 5 minutes, it's not going to make sense. But when you look at the 15 minute, you're like, those shadows don't make there's just noise. Don't pay attention to it. Look at the higher time frames.
And that's really important what he just said. I definitely would not let that go over anybody's ears, because what he just said right there is super important. People have to grasp that and even rewind that to listen to what he just said. Because when it's chopping around, you don't know what's going on. You got to look at the higher time frames to get a better idea of what's really going on. And it'll tell you what's going on. It looks a lot cleaner on the higher time frame when shit's starting to barcode and do some weird shit. So I agree with that 100% all the way. He's speaking some facts right there. I love that. And so another thing is to skip on from the 1 minute to the 5 minute. We'll just stick with between the 5 and the 15 minutes time frame, and we'll talk about higher time frames too. But the only charts that I drew out was just 5 to 15. But something like this is also one of my favorite setups too. It's pretty much just showing that there's a big, nice green bullish candle, and then you get a little bit of sellers stepping in, but ultimately buyers bought us up, long wick to the upside, and then we close out strong. But those 3 5-minute candles, this is what it would look like in a 15-minute time frame. So it's super strong. It is showing the strength there. But now you may have traded this and potentially got out or got faked out or got scared on this. But if you would just held it through for the 15-minute close, or if you just wait for 15-minute close, it might even be stronger. And we have even a nice chart that I would love to go over, a nice example that I drew out of what potentially could happen, and also what happens about getting faked out. So we'll talk about fake outs here real soon, and we'll also talk about waiting for a 5-minute close below a certain level. So I'm gonna show you guys what it looks like trying to trade puts on a support level. And I'm also gonna show you guys what it looks like trying to trade puts on a support level and then getting faked out, because it happens, to be honest, man. Let's talk about fake outs real quick. So a lot of times, myself personally, in my experience, I like to try to get in the trade real early, which actually kind of wrecks me a lot of times. It honestly does. It can wreck anybody. It can pretty much. There's something called fake out. So you get into a trade before the 5-minute even closes. You're just seeing the seller step in or the buyer step in, and you think that it's going to go in your favor, and you hop into that trade. And then a lot of times, the last 2 minutes of the 5-minute close, or the last couple minutes, or the last 30 seconds, it can instantly go the opposite way of your favor. And the next thing you know, it reverses the other way that you don't want it to. And that happens quite often. So it's really important to at least wait for a full close, although you need some patience with that. But it definitely does work out in the end, to be honest. So is there anything you'd like to add about fake outs or anything in your experience? I hate fake outs, man. Especially with the SPY chop on Thursday, bro. That was real. Fake outs it was looking risky.
No, just pretty much wait. I mean I've exactly know exactly what you're talking about, because we all done it. Like when you first start trading, like it's the same thing, and that's the psychological game, right? You see it, and you're what it really comes down to is you're trying to catch bottoms. Like you're trying to catch the bottoms of it, and that's a big no. If you're always trying to catch bottoms and anticipating like, hey, the next 5 minutes is gonna reverse, like think like you're gambling. I feel, because you're just in a trade. You're not looking for confirmation, right? If you have a support level that's been hit plenty of times, once or twice or even 3 times, right? It's going to come down to it. It's going to react in one way, right? And a lot of it, what happens is fake outs, right? It'll go down immediately, like, oh, it broke the trend line, right? You get like 10 orders in, and next thing you know, it just goes down, and you're like, oh yeah, and you see it profits 10%, 12%, and like a second, it spikes up, and right off that, if you have your stop, you get stopped out, right? 2, or you just let it ride, and then you get wrecked, You know, so a lot of the things when it comes down to it's just confirmations, close confirmations, the 5 to 15, like exactly what I said before, 5:15 in the hourly, right? You'll see a lot of movements on that. If they all match, you know, at 3 o'clock on a dot or 2 o'clock on a dot, right? They're gonna have some reaction, and especially if they're like on a support level, right? Just wait until that confirmation. Wait until that close past it. If it closes under, okay, that's your confirmation. And if it shoots back up, hey, you know what? At least we got one level of protection to protect that capital, right? But if you try to go in before, and it goes in your favor, and you're like, yeah, and you know, celebrating, you go back to your chart, and next thing you know, what your chart see, what you see in your chart doesn't reflect what you should saw a second ago in profits. You go back to your other, you know, TOS. Next thing you know, you're in the red. You start to panic. You go back. You know that takes time. So wait for confirmations around those levels. That's, you know, the only opinion I say. That's the only thing that I know that has hurt me. And I've you know I've been like 50%, 40%. I'm like, oh my god, you know, I just had 100% profit, or you know, $100 profit. I mean, and now like I'm negative 100 just because I didn't wait for that confirmation. So
Yeah, it happens. It really eats me up. Same thing happened with Tesla. I didn't wait for it closes, and the next thing you know, I get wrecked, hoping onto some hopium, hoping that it goes back in my favor, but that's never the best way to go. It's more easier, and you have a lot more confidence when you wait for that close below, just like we're talking about. But we all have been there where we took closes, and even sometimes I still do that too. In my last live trading video, I took it pretty much before a 5-minute close, and I said it was pretty risky, but the momentum was there. But still, I highly do not recommend that. I recommend for 5-minute close. So let's get right into this quick example of what it looks like for an example. So this is just the 5 minutes. If you were to look at a 15-minute candle, this is what those 5-minute candles would look like. There's 3 5-minute candles equals to 15 minutes of time, and so that's a 15-minute candle. So next pretty much 15 minutes later, you get some hammers. You get some stuff that looks like a reversal, to be honest. You get something that if you're looking at the 15 minutes, you're like, this is looking real nice. Like on the 5-minute, you're looking like I want to take some calls, some hammer on support. What I like to do is like I said, though, there's no reason to get into puts yet, because even though it broke your support level, it's still not strong enough of a reason to actually hop into puts, because many times, like me, I will do the same thing and get into it, hoping that it's going to go down, but I get wrecked because there's no 5-minute close below. And so what you want to wait for is let it do its thing, let it breathe, let it get some buyers, let the buyers volume maybe step in just a tad bit, and wait to see what's happening. So you can see when the next 15 5-minute candles or 15 sets of 5 minutes, you can see that it's pretty much creating lower highs still. And then it comes to retest that support. And this is where you want to wait again, even though it's retesting your support level, you just want to wait. And this is what it looks like on the 15-minute time frame. So as you can see that these are the 5 minutes right here. The first 3 candles was this big one. The next 3 candles was around the support. And the last 3 right here was this candle right here. This all represents the same thing. This is what a 15-minute candle would look like on those 5 minutes, because once you have the candlesticks down, you can already imagine in your head what 30 minutes is going to look like. Just grabbing the 2 15-minute candles, you can already imagine what the 30-minute looks like. And it takes a lot of time to get there, but you can get that. And so on the 15 minutes, it looks super good, super weak. And just like C2 was saying, once they all line up in your favor and they're showing some good signs that, hey, this is the reason to get into some potential puts because your technical analysis lines up with it, you can see right here that it gets a little bit of buyers, ultimately a big seller candle. On the 15-minute time frame, same thing. The buyers try to step it up, but it turned it into a weak candle. It turned it into a real weak candle. And so you want to wait for the 5-minute close. You get the 5-minute close. Essentially, this is your entry. Nothing's ever perfect. If this was a perfect trade setup, this would be the perfect trade, and boom, you get some nice profits. 15-minute candle time frame, this is what it would look like. You can see that.
yeah, and you put your stop loss right above those. Go back on the 15. So put your stop loss right above the wicks. You know, so this way, if it wicks up, like, and you have your stop loss right above it, I mean, that's like a perfect, you know, like 3-to-1, you know, risk reward right there, you know, because you're risking that much from like the top of the week, maybe a little bit past it. So this way it doesn't, you know, and you can use like a ATR indicator, or, you know, put it like, for example, me, like I put maybe like $10 or 10 cents off of that and let it ride, you know, because what are you going to lose? Like $10 or $20? I put immediately $20 for the most part. And then I started looking at it. And if it hits, I get with that. I know that I lost and it was a bad entry, you know?
Exactly. And so we'll also talk about what happens when it does a fake out right here after this, because this is a perfect setup entry. This is if it was going in our favor and we saw the opportunity and we waited for a singular 5-minute candle close right here. That's the entry. And then the whole idea is, since it broke new lows, it broke your support with a hard close below, then it's, you're pretty much going to essentially start printing money. But same thing with the 15-minute candle time frame. I recommend anybody to download this picture or take a screenshot of this, and it's pretty much just who's in control, because if you were to pretty much compare each candlestick with this single picture, you can pretty much see that, yeah, this was a real weak candle. Sellers stepped in pretty hardly, and buyers tried, but sellers were ultimately here more than, they overpowered them. So anyways, that's just pretty much that. Now let's talk about real quick a fake out candle, because this is what happens quite often, to be honest. So a fake out is when you hop into those puts. This was your entry. This was your entry from earlier. This is where I would have entered. Then you wait for another 5 minutes to try to get some profit, just like we talked about. Oh, you're up 10%, you're up 15%. You're feeling good, you're feeling happy, which is what I love to see. I love 10, 15%, and I'd feel real sad if that got ripped away from me, which happens though. It does happen. So let's say I did enter right here on some nice puts, thinking that we're going to continue on down. Oh, I'm super happy. We're in 10% here. Then it gets bought up, representing a hammer candle. And then you wait for the next 5 minutes, which is ultimately 15 minutes total. And then this happens. Then you get a nice 5-minute green. And next thing you know, if you pop up the 15-minute candle, it looks like it's pretty strong. It's going back to the upside. I actually meant to put this doji and meant to make it just close above the support, so it looks like it never actually closed below the support. That's what I meant to do. But pretty much this is what a fake out can look like, to where it closes above the support. The 15-minute never, the bigger time frame never even closes below where the 5-minute does. So many times what happens too is you get a 5-minute close, but then on the higher time frame, the 15 minutes, the 30 minutes, the hourly, it closes pretty much. It pretty much closes back to the level where you thought it was a good level for some good puts. But that's pretty much what a fake out is. It could even happen on the small time frames too. It can instantly get bought up, and you have no way to exit quick enough to where you start losing money. So this is just one good example of what a fake out could potentially look like. You enter some puts right here, long wick to the downside, hammer candle gets shown. You're getting a little bit, scared, nervous, curious what's going to happen on the next 5 minutes. That's 15 minutes later. Boom, you get this 15-minute candle close, and these 5 minutes look like this. You're pretty much scared, and the next thing you know, it gets reversed on you. So that does happen a lot. And the next thing you know, you have to exit right here. Or if you're strong enough, like C2 mentioned, you got your stop loss way up here. Maybe it never even gets way above there. Maybe it just continues, maybe it gets a little bit of buyers and it continues on back down. Who knows? Like it's pretty risky when it comes to, you just got to make sure, you got to wait for these candle closes so that it's more in your favor. If you don't wait for these candle closes, you're most likely going to get faked out. So that's all I have for this quick little
You can also,
let me go right back to
you
it.
can also see the breaker structure too. I mean, that's another gimmick that I like to see. So if you're going, and if you're in a downtrend, it's like lower low, lower highs, and next thing you know, like the next one prints different than that pattern, then like that's a break of a structure, and then that's when you kind of like interested in the candles, because is it going to be a fake? Is it going to be a fake out? Is it like trying to fake you out, thinking it's going to be a break of structure, and then it's just wicks down? It's like, especially on news days, when data comes out, or news days, or Jay Powell, I love that guy, but when he speaks, like it does that. Or even in anticipation of like something that is people are thinking, or the market is thinking it's going to happen, like are we going to have a pause, or raising rates, like people react. I mean, the market will react to that, and sometimes you'll see it like go up, and you're like, oh my god, I'm in the right side, and next like boom, right, it hits like a supply demand, and it just reverses you. So it's kind of very important to know candlesticks and what they mean and what they represent, especially when live trading, because you can have a huge solid red candle, no shadow. You turn away for a second, you come back, that thing boom, and next that strong candle just became a weak candle in a matter of 20 or 30 seconds before the candle closes. The whole entire 5-minute candle, man, that thing is like ripping. You're like, oh my god, man, that candle is on steroids, big, fat, whatever. And then 30 seconds left before the candle, at 4:30 minute, the last 30 seconds, it just reverses. Next thing it goes green, and it prints a hammer. your contract is ruined. You're done. Just exit, reassess, and that's it. Take that loss, move on.
Yeah, exit, reassess, and take that loss. Have good risk management. Don't have hopium. Don't let it run all the way up past your stop loss. And this is what we talked about in the last podcast. In the first podcast, letting it run your stop past your stop loss and saying, okay, I'm gonna put it 20%, 30% stop loss, 40% stop loss, 50% stop. Like, don't do that. The moment it reverses on you, you have to have risk management and you have to just pretty much accept the loss. It's better to take that cheaper loss, maybe a $20, $50 to $80 loss, instead of it being a $200 loss, a $250 loss. I've seen that happen to me many times where I'll be green 10, 15%, go back
Still
down
happens.
10. Yeah, it still happens. Go back down 10, 15%. I'm thinking like, it's going to come back around. Sellers will step back in. Next thing you know, buyers are still here, going, pushing it up, pushing it up. Now I'm down 20%. Now I'm down 25%, 32%. And I'm like, dang, whole 1/3 of my trade gone just because I didn't do what is the best thing to do, which is have risk management and understand that you have to take the loss. Pretty much it's going against you now. It's going past your stop loss. The structure is stronger against you. So pretty much it's just better to take the loss beforehand than letting it build up to a big loss. And that really can take you out the game, to be honest. It really could.
I know. I mean, I know. Going looking at candlesticks, and just tying it back to the topic of candlesticks and this video is, I look at the closes of candles like around my stop losses, and if you're like a little bit more of experienced trader, you can flex it a little bit. Like sometimes I put a stop, and I'm like, you know what, I'm confident. I'm confident in my thesis. I'm confident in my action plan of like what's gonna happen. Let me move it and do what Avi said, let it breathe, right? That was from that YouTube video, right? We're gonna let it breathe, we're gonna let it ride a little bit. But still have some sort of risk management, but at the same time you can, move it along and tailor it to your trading. Like 10% stop loss for me, it might be different than someone else's 10%. Like I can risk a little bit more because I have a bigger account and my plays is usually a bigger size. So I know what I'm willing to lose, right? Like if I'm willing to lose $500, then I'd be better. I'd be better playing with like $3,000, $4,000. Like it's. I'm not, but just as a prime example, But looking at those candlesticks and assessing it, if next thing you know, if it's close to your stop, and then you get a very weak candle, get out that trade. There's plenty of, even myself, like I'm looking at the closes and I'm looking at the 5 minute. 5 minutes going to close, 15 minutes going to close, and then the hour's going to close, and I know the week candlestick is going to print on the hourly. As soon as that closes, boom, like the market's going to react because everybody's looking at the hourly close, and if it's a weak candle, it's just going to follow through. So might as well get out of it if it's going to print. If it's going to print a hammer going the opposite way of your order, get out. That hourly candle is not strong enough to support it. Like it's gonna go against your favor, But if it's a strong candle and you're still in the red and you're really confident, then you know what? Let it ride, let it breathe.
Which I agree with you. That's probably one of the most important things that people don't do. They don't look at higher time frames again. And it kind of just wrecks them, honestly. I see a lot of people trade on lower time frames. And I'm sure if you looked at a little bit of higher time frames, it'd be a lot more helpful. And just like you said, like when you wait for an hourly close, a lot of people are looking at that. And I'm looking at that too. Or I'm looking at the 30 minutes. I'm looking at the 15 minutes. I'm looking at the 4 hours. I try to look at all the higher time frames just to see what's going on. But just what he mentioned is really important about when a higher time frame like an hourly closes really bearish. If it's super bearish, it's a strong red candle, and you're taking calls on a support hoping that it's going to bounce up. Most likely it's not going to bounce up. It's probably better to go in the favor of what's already happening and look for some puts if that's what's going on. Unless the hourly has a long red, then it gets bought up to a hammer, and you want to take some calls, maybe that's going to go in your favor because the next hourly could continue that momentum on up. And that's what I love trading too, is those type of candles too. So I definitely agree with you. Waiting for a higher time frame close, waiting for an hourly candle to close.
I wanted to bring up real quick before you go to the next topic is there's different candlesticks like that you can use. I know, like if you go to TradingView, you get like the Heikenine. I know I don't even know how to pronounce it, but they have like all different ones, and I mean I don't even know what like how to even read that. Like I just know it's just they look nice and that's it. And I need to have like an actual number wise. but they say that, it works in a different way, I guess, in a different trading style, but there's different candlesticks. There's candlesticks that we're talking about, I guess it's the normal ones that if you open up your iPhone and you go to, stocks, the iPhone app that has that, you'll see the candlesticks. Or if you go to, Investopedia, you go click on any ticker or any futures, bring it to a trading view platform, and you'll see the candles. And it's very, very important to read that, because, and it's easy. Once you learn it, you understand it, Google it, YouTube it, hop on a Discord, and Prada has like a tab just for that. Like, learn it, because if you're trying to make money and don't even know how to read a 5-minute candlestick a chart, you're gonna lose your money. Straight up, you're gonna lose your money.
I agree. You're gonna get wrecked in the market. Look, try and trade something that's gonna go totally against you. So yeah, I agree with that. And the hiking candles, man, I don't even know how to pronounce it either. But there was this video from Rich Dad Poor Dad that I was listening to, and a lot of the I believe it's the Chinese traders. They use those candles, which it's pretty different. There's a lot of different candlestick methods, just like you're saying. There's those high quiche candles. I don't know how to say it. There's line graphs, bar graphs, candle graphs. So, but obviously,
You
yeah.
know how they originated?
No, I don't know how they originally. Like, do you
I
know?
mean, I don't know like the full 100% story, but I know, like, I downloaded. It was one of like the first books I downloaded reading on it. It was something to do in back in the day, Japan, when they were doing like rice trading. So it originated from like how they measure rice and
Oh
the
wow.
price of rice or something like that, or like something along like that. Like, please just don't destroy me in the comments, but like that's something along like that. It's like something like that that I came across, and then it went from that to future trading and the stock market and this and that. And it's just kind of like, it makes me think, like, once you read about it and just Wikipedia that, like, how did they even do it? Like, how did they, like, what, like, I we have computers that tell us, like, how did they do it back in the day? Like, oh yeah, this candle, fine, like, fine, like, like, I just don't understand like how it was. So it's very, very interesting topic to look at.
It is interesting. I've seen some. I've put on the hike-ish candles before, and I was like, "What is going on?" But I do remember how he was explaining it, and I still don't understand it. But each line just represents each line. There's 4 lines. Each line represents open, high, and low and close. That's all I know. But even then, like, it's so weird. Which one do you know? Which one's the open? Which one's the close? I don't know how they do that stuff. It's pretty interesting, and it is really interesting. There's a lot of people that I've seen even do different trading methods or different candlestick methods. A trader that I love to watch, he does something different where even his green candles, the ones that are going up, are red. It's pretty weird. It's really weird. So I don't understand that. So a lot of people
I've
have,
seen people do that.
yeah, I don't know what that's exactly called, but a lot of people have that. I don't know what that is. I don't get that. So I've seen that before. I don't know what it is. I've seen it, and I'm like, what's going on? Why is it going up? But it's a big red candle, and I've tried it. I've tested it. I've tried to download the script of it, and it was weird. It was like I knew I would get faked out if I tried it. It does not look like it's gonna work for me. It works for them, but it doesn't work for me. So, but yeah. So we got 8 minutes left, and pretty much, yeah. I would just say the education on candlesticks, the very basics to understand the story behind the candle, what a long wick to the downside on the candle even represents, or a shadow, whatever you call it. I forget what other people call it too, but yeah, I mean, I really think that it's really important to learn the basics of just the very first thing, which is candlesticks, and then move on to other stuff. But since this topic is candlesticks, I do recommend a lot of people to watch, whether it's my video or other people's videos, just literally YouTube candlestick education, how to trade candlesticks, understand candlesticks, patterns are formed with the candlesticks. So it's really important to read those and then move on to other stuff like volume, RSI, EMAs, all them good stuff. So, but just like C2 said, if you don't understand candlesticks, you're most likely going to get wrecked if you're trying to come in this game thinking that you don't need to understand candlesticks. No, you need to understand candlesticks.
I want to share my screen, maybe because pop up my bad for the lighting. All right, so looking at just any rent. I mean, right now, like, this is SPY, so we'll just keep it at that. And then, so normally you guys gonna see kind of like where we look at, from a higher time frame. So this is the weekly, right? So every single one of these candlesticks is a week. So this is a week, so that's 5 days worth of price action, right? So at the beginning of the week, the lowest it went, it was 426.91 for SPY, and the highs it went last week, and this is Monday through Friday, at 737. So you're looking at from a $10 difference. So in 1 week, or in 5 days, this price moved up and down at least $10 in each direction. So, and you look at it, right? Because it starts developing patterns, right? A simple, simple pattern, simple, thing that you could do is draw trend lines, right? Go from one shadow to another. So, and it surprisingly enough, it just reacts to it. You can do this, right? What's
Which
it
that
look
looks
like it's
good.
forming? It looks like it's forming a wedge, right? So if you look at, and then you can download, you can Google it, you can go on Learn Option Trade Discord, and you can see like the candlestick patterns, and this represents kind of like a wedge that,
I'll pop
to
up a
me,
wedge here.
eventually another is gonna go like this, and it's gonna pop up, or it's gonna come down. And how do I know this, right? Because I look at the candlestick patterns. I look at what's going on, right? It came over here, it bounced over here, so that's 2 touches. So what's it to say that SPY is not going to do this, right? It's going to come down. Let's say it comes down here, and then it bounces back up. But when it bounces back up, right, it'll bounce off of this and then shoot back down. And then this will help you determine like what it is, right? So this is a pattern that utilizes candlesticks to develop this pattern on the weekly. So I will look at these areas right over here, kind of like in the future, what's going to happen. So if I have the price action go all the way down to the bottom, and then we're talking about like the 5, 15 or the hourly closing, and it closes over here, and actually wicks up, right? Immediately I'm thinking like, calls. That's like the most favorable, can't say that, option to take, than puts. Or if you see the opposite, if you see like a big, candlestick, but like there's a big shadow on top. So you can tell like there's a lot of selling pressure that week, right? So it might continue down, the volume and so on and so forth, right? Going down to the daily. Now, every single one of those candles that I was just showing you now gets broken down by 5, and then you fine tune it, right? So now I'm looking at this and I'm just, matching the wicks, making sure this touches somehow, right?
Wow, that looks
Putting
good,
it
honestly. You swing some puts. Even the weekly look
there,
pretty weak.
right?
Damn.
Right. So this is like the day. So every single one of these, right, is a day's worth, what happened in one day. So this one on Friday, the lowest it came down to was 429.89, and the highs that went down, for those 5 days, it was 536, right? So that's like a $7 move. It's like, yeah, like a $6 move, actually, almost. So you can kind of see like what's going on, right? And then you see this one, like this one right here, it had a lot of buying pressure, right? Next thing over here, it still has buying pressure, but this one has, it closed at sold off from it closed lower than from where it opened, because it closed here, it opened here, and it dropped down here, and it came back up, and then closed right there, all within one day, right? And so on and so forth. And you go down to the 4 hours, is right. Now you start to see more detailed, I guess, data like of price action of what it did, and then you should fine tune it, right? Looking at this, right? I'm immediately looking at Fibonacci, right? I put it from the bottom low over here to the high, right? Now I'm looking over here. Key level areas of resistance, or key levels for me, is the 6.18 and the 50%, and then boom, I mark it real quick. I'll mark this one right over here real quick. Why did I put that there? I don't know. Right? Erase this, and then just study patterns. Study, like, look at what previous candlesticks closed out, right? Because this is my Fibonacci. It looks like this area right here. It looks like you know, this low shadow over here, it reacted, and look how much it shot up. Same thing with like the 60 or 61%. I mean, it's kind of like in this area, but
There's a lot
I
of
look at
support
it,
and like reaction on that level.
drawing this area, right? So I'm looking at the most nearest candlestick is these two, and I'm looking at these two wicks, right, on the 4 hour. So I know like that this is an area that is going to get bought up, right? So when it comes down to price action, where the hell am I? All right. I want to see this come down here, right? And then come down here. And then just being like, just knowing to be patient. Obviously, am I going to take trades up here? Probably not. I might scalp if I see opportunity here and there, but nah, like I'm gonna wait until the area it gets down here. You might wait a day or two, and that's when I do like my really big plays. Like I know, like I have confidence that looking at the most recent history, right over here, in October 9th, which is last Monday, excuse me, last Monday, it came down to this area, got bought up immediately. It came down again, it got bought up immediately, right? Anytime before that, I would say this day right here, right? On Friday, 9/29, right? Same thing. Came down, but then it got bought up. Came down, wicked down, got bought up again. This is like noise to me, but I'm just looking at past history of what's going on. You can even actually go this, and let's say you bring it down here a little bit further down, because a lot of the wicks are touching. Like I'm looking at this wick right here. And that's that. So when it comes down to here, right, you want to see like I don't have the ability to draw it, but let's say you get like a candlestick over here that, it comes down to here, and then you get like a big wick like that with a large body, right? And this is like something like this, but over here, what did history do? It came up, right? So that, and you would only know that if you know how to read those candlesticks, right? Like this blue candlestick, right, is the same size as this one, right? But Pride, tell me, which one is the stronger candle, this one or that one? Right?
That
This
one over
one is
there.
the weaker.
Yeah, that
Well,
one's
this one's a
weak.
stronger candle. This is the weaker candle, right? But then look at it. This is where it closed, and boom, it shot down. And it's no, looking at it at 4 p.m. or let's say 3:58. Oh man, I want to swing something. I want to swing something, right? I'm looking at this and it's just like, and came down pre-market, got this, it pretty much almost created a doji during the day, right? Very, very weekend. I'm not telling me that it's going to shoot up. Yeah, I have a high chance of hitting those puts if I swim, right? But am I going to go for calls on this area? Probably not. I mean,
Mhm.
I don't really see nothing that tells me that it's going to shoot up. I see down here it's going to shoot up, but I don't anything, from this candle close. Absolutely not. So, but how do I know that, right? The simplest thing, I'm just showing you a simple, I'm not even going into details as to like, what we're looking at, nothing. I'm just looking at price action and what the candlesticks tell me. It tells me that that's a weak candle right here, right? And no surprise, it went down the next day, right? This one, it got bought up, right? When I came down, I mean, these are large wicks, so you can kind of see the what's going on here. Same thing. It looks like a key area, right, at 434, 434.48, right? This zone right here, because it came down, it got bought up, came down, got bought up, came down, wick down, got bought up again, and so on and so forth. Let's look at the cues. I know the cues are a little bit neater in terms of price action, I feel. And I haven't really looked at the cues in a very long time.
I always have them
So,
up on my 5 minutes in the morning, but I never trade it.
yeah, and I'm gonna take out oh my god, I don't even know what's going on here. Well, let's do this. I mean, let's just
Star
delete it, right?
Wars.
Exactly, dude. I can always tell when, like, how long I've charted this because my lines are always changing colors. Like right now, like I'll have like different weeks where, like, you know what, I'm gonna go red. So like
Mhm.
all my reds are my supports, and all my greens are my trend lines. Now I use purple or white. Like I've been doing white as of late, but you get your preferences. It's kind of fun. So
Yo,
then I'm
look at
looking at
that.
this,
That's
right? This
I
is,
can't.
and I'll do like a quick, very, very quick charting, which kind of is gonna resemble SPY. So it's kind of like almost unfair. And mind you, I have not charted it. I don't trade this. Like I don't even know what this is here. Like I'll keep that because that just looks, I like it.
Yeah, that shit looks good, bro. It looks like it's respecting that trend up there,
Yeah, I mean,
to be
these
honest.
are the cues. So all right, so let's look at this, right? I see that it wicks down. So immediately I see this wick down. And mind you, this is the daily. So this is like that small wick is a large price point, probably. Like large move. That's probably like a $2-3 move. Let's see. So 363.91 all the way to 365, right? And just right off the bat, right angle, boom. I know that's probably like an area. right? Now you kind of see like what's going on a little bit. Breakdown, up, came down, up, came here, closed, and boom, it gapped down, gap down, went up, broke, got faked out, came down, and then got bought up all the way up, came down, and then right now it looks like it's retesting. So
Mhm.
looking at this, what are we bullish? Are we bearish?
It looks
What do
pretty
you think?
weak. It looks pretty weak, even if you compare it to the candle, kind of the same size as that same candle to the left of it. It looks almost the same size. But there's a long wick to the downside. Could easily indicate some buyers stepping in. But if I had to choose, I would probably think it's gonna come on down. That's a long wick to the downside. But if I had to choose, I'm sticking to the puts. I'm sticking
Yeah,
to
and why are you thinking why are you thinking
I'm think
puts?
I'm thinking puts for two reasons. Not only the first very simple reason, just like on the last one you showed us, if you grab that same candle and zoom to the left a little bit, it almost looks like the same candle earlier over there that it had the gap down. It almost looks like the same candle that had the gap down earlier. That one, yeah, it almost looks like that one. The only difference is that it has a long wick to the downside on today's candle, so it has a nice wick to the downside on a good support. But the second reason why I think it's going down because SPY's going down. Both are respecting the nice trend that you have. So I mean, it looks real bearish, looks real nice for some potential puts. So that's why I would think, it's gonna go down. And that's just based
Yeah,
off pretty
yeah.
much the
I mean,
candles.
it's a strong buy to can. I mean, it's a day sell off. I mean, it went from 370 all the way to 360. Well, it went down all the way to 363, and then at the end of the day, it got bought up and closed out at 365.25. So you can just kind of see even actually how it opened, right? So over here is where it opened. It went up to 371.23 just to paint the story, and then it went down all the way down, right, to 363.98, and then got bought up before the close, and it closed up at 365. How am I able to tell that story, right? Just by looking at this one candle.
Yeah.
And that's what it comes down to. It's just your candlesticks is the language of what you're using. I'm sure you're gonna get people saying, look at volume, this, that, it's not that. But listen, we're not moving markets here. Like we're just trying to make, a little side hustle, make 300, 400 a week extra, like $10 days, $100 days. Simple, man. I'm not trying to get a Lamborghini next week, right? And the starting point it is you gotta learn how to read candlesticks. You will never get ahead anywhere. You can go to any Discord, any YouTube, download Wikipedia, whatever. But if you don't know how to read candlesticks well, that you're able to, like exactly what I just did, is just see one candlestick and tell you a story of what happened without even going into the lower time frames. You're not gonna get anywhere. You're not gonna be able to succeed in this game.
I love that. And I agree with that 100%, bro. That's breakdown was real nice. And I agree with that. I'm gonna make that the intro. But that was real nice, bro. I love that a lot. I agree with you 100% on that. I think it's important to have the education of candlesticks. If not, you're gonna get wrecked. As simple as that. You're gonna get wrecked.
So we'll do a little thing for a little intro for the next video, right? So we'll go revisit this next time we do a podcast, and we'll see. So what are you saying?
So I'm
Bearish?
thinking, I'm thinking puts. I'm gonna stick with puts. I'm gonna stick with puts.
Uh, I'm gonna go the same. I mean,
You're
I'm
gonna
just
go the
looking at
same.
my Fibonacci's, and I'm looking from high to low, right? And I like to go through key area. Like, is this a key area? Absolutely. I mean, look at this and look at the gap down. Like it's a very key area. If anything, I should be drawing this a little bit like that, right? But I think it's gonna go down and try to hit that Fibonacci area, right? And then from there, we'll actually see if it's gonna continue down, retest down here, or break down. Anything below this right here, put city, bro. Put
Put
city.
City. I agree with you on that one. And I love that. We're going to revisit this and just talk about revisiting on our last podcast. If anybody's watching all the way till right now, thank you. But on our last podcast, we talked about the Israel and the Palestine war and the potential gap down. And same thing actually happened. So, guys, C2 was correct. Same thing happened just like the Ukraine war and this war too. Gap down, instant bought up pretty much for the rest of the day, which was real nice. And yeah, so just wanted to let everybody know that happened. You can go
We
back
nailed
up
that, and we called it out the day before.
the
Like
day
we did that
before.
podcast at 9. I know, I mean, I know you weren't able to release it, like, you know, it was very late and it was last minute podcast, but we predicted it right. And all we had to do was look at past history, look at the candlesticks. If you go back to that video, we talk like there's a large portion of the candlesticks that we talk about, like, hey, it did this, it will gap that, and then, you know, so on and so forth. And the next day it did that. Now, did I cash that? No, but I did wait for the reversal and I caught the reversal. I think I made a decent amount of that, you know, money that day. That was
Yeah, it
like
was
a
a good
300
day.
back.
I believe everybody printed that day in the Discord, and
Yeah.
every printer boys were up. But yeah, bro. So we're gonna go back over on this one too, revisit this one, and show people what happened. And yeah, so just wanted to update everybody. But I appreciate that. I love this interview or this podcast a lot. Breakdown of candlesticks. A lot of good information here. And so if anybody is still curious on how they can learn more, if they want to be around people just like us that just constantly talk about stuff like this, then definitely join the Discord. And we're constantly talking about trading every time. And if you want to be in a future podcast, let us know. We'll talk about, we'll bring up a topic and we'll have something with anybody in it. To be honest, we would love to have some guest people on it and talk about their trading experiences, what they love to see, how they trade. And we can even talk about trading setups on the next one. So anyways, appreciate you guys watching this video all the way through. If you did made it to the end, please drop a like and comment and pretty much hit us up, man. Follow C2 on his socials. He's killing it. He's always predicting what's really gonna what potentially will happen. And for the most part, he'd be correct for real. He'd be really killing it, man. He'd be killing it, bro. He'd be swung exposed spy puts. Woke up $900 banger. Woke up to a $900 banger. Bro did not even need to trade for the rest of the day. I don't even know why he was still here.
But that was that was the confidence in the candlesticks. I read the candlesticks, and I'm gonna beat it to everybody's thing. Like, weak candlesticks, it will tell you a story. Or and if it's a weak candle on a close, am I gonna swing calls? No, I'm gonna swing, you know, the reversal. You know, like, it gives you more of a confidence boost that your play that you're in is trying to get in is gonna be right. That's it.
That's it, guys. So thank you guys for tuning in on this one.
C2 out.
Appreciate you, C2. Catch you guys on the next one, man.